The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, good afternoon, folks. The first chart that I've posted into Tiger TV today is the chart of the 1987 stock market. You'll see that it's like there's some handwritten things on there because I saved it from 2009 when I printed it out, but I had the original ones that I used in the original Astro Cycles book many years ago. I want to walk through this with you folks because I think it's rather important from a cycle point of view, and that's what, when you're using astrology things, that's all you're looking at is you're looking at numbers. You're not looking at anything that is esoteric or anything like that. There really isn't. There was a story many, many years ago, well, several hundred years ago, when Isaac Newton was debating with Johann Kepler about the use of astrology. And Newton said to Kepler, he said, Dr. Kepler, he said, the only difference between you and I on the subject matter of astrology is I've studied it and you haven't. And so many people that badmouth it, they don't really study it very much. And so what I'd like to do today is just get us ready for something that could be happening, because it is like it's like a treasure map if it's correct. And so far the treasure map is really coming spot on. In 1987, we topped on August the 25th at a thing called harmonic convergence. That's when we had 5 of the major planets all lined up at 0 degrees conjunction. They were like bowling pins. There's only happened about, maybe a dozen times in all of history. One was in 1974 at the bottom. Another one was in 1982. We had another one in 2000, but the one in 1987, of course, was the biggest one. People thought that it was going to be the end of the world, but that led to the stock market. But it was a 2-day, well, not 2 days, but we went down from August 25th into October 19th. But the way that we did it was after it topped on the 25th of August, the market came down and bottomed on the solar eclipse of September 22nd, and then rallied up into the lunar eclipse of October 2nd. Okay, this time what's happened is looks like we're coming down into the lunar eclipse and full moon, which is today. We took out the low we had last Monday. We've taken that out by less than 1 point in the S&P, maybe 8 Dow points. I mean, virtually nothing so far. That doesn't mean we can't go down and shatter that and go lower. But what it's saying is that if we can rally now between the solar eclipse, the lunar eclipse where we are now, into the solar eclipse, which will come in on the 22nd or 23rd, the 22nd, which also happens to be the spot where the Bradley model turns down sharply for 2 months. So if that's going to be the case and it sets up like that, you This is not good, honey. There we go. Go back now, I think. Hopefully. we're getting ready for a storm here in Arizona. I happen to be in Scottsdale today, and I think that's the problem that we ran into. But basically, what I'm saying is we're having the solar eclipse coming in on October 22nd. That'll be a new moon. And if the market has this rally starting today and then goes back into where we are on October the 22nd, that will be a very, very interesting time, because that will fit exactly with what happened in 1987. In other words, what we've done so far has been almost perfect to what happens in 1987. We took out the previous low, as you can see on that chart from 1987, which is equivalent to 1918 in the S&P, and all we need to do is to keep that closed above 1918 for the next few days and then rally into that point, because the rally that took place during 1987 went exactly to the 61% retracement that came in on October the 2nd of 1987. Now, there's something else that's occurring that's very important. On October the 2nd, 1987, there was a Venus conjunct Uranus, which when Venus was at 0 degrees Uranus. Well, on Friday, 2 days from now, we're going to have Venus is opposition Uranus. So what we could get here is maybe just a 2-day rally, and then the market roll over and start down. But if it does that, then it's going to start earlier. But what the cycles are saying, that it's not going to happen until the 22nd. Now, what I'd like to do is I'd like to share with you something that I've written a book with my co-author, Shane Schmolian, and I would like to show you the cover of the book. It's going to be coming out here hopefully in the next 3 or 4 months, and it will be it's all statistics, folks. It's all based on numbers and the statistics of astrology and stuff like that, and it's really it'll be a good book. It's got a lot of stuff in it. It's been endorsed by some pretty nice people that have looked at it, but Shane has done a great job with this. He's a young man who's a very adept astrologer, along with being a physicist, and he's a very, very smart fellow. And we have combined using his expertise with the commodities, with the computer that Alfie Lavoie came out with, the titanium edition of his Astro program that allows you to go back and program all of these and see that that these numbers are actually the case. But that's an important thing to look at. But what I wanted to show you now is part of the book that I think is the most interesting, because I've not shared this with very few people. I posted this into let me get this up here. There we go. I posted this into Tiger TV many months ago, but I haven't done anything since that time, because we've done more work on it. But I wanted to show you where we are now. As you can see, this is we're looking at October 8th today, and as you can see, the circle that I have on this chart here, that's a very, very strong negative down move, if you can see that. And so if that's the case, we should bottom here. And then if you'll notice the green lines, how the energy, and that's basically what this is referred to. It's the energy that's supposedly there. You see that we go right up in, and it peaks right around October. It starts peaking. There's one peak around the 11th, and there's another one on the 19th, and another one on the 23rd. So that's what it's saying, is that this thing should really snap back and go into an up move, to see if that's going to be the case. And let me see if I can get this chart to come up right. When you get an Italian to work on a computer, you don't always get the results that you want. I hope it popped in there, because if it didn't, I'll have to figure out a way to do it after the break to get it in there. But these are the statistics behind the market. And what we do is that we take the work that was done at Yale University by Dr. Burr back in the 30s. He was a physicist that gave weightings to the different geomagnetic forces of the planets. And so that, Mercury has a very strong geomagnetic force because it's the closest, then Venus, and then Mars, and we know what those are, or what we think they are, and then we plot those to see what's happening, whether it's a positive or negative environment with the stock market. So this is the we're looking at the market here for today, and these are all negative, and they should start turning positive. And so I'll have to figure out, I didn't post, so I'll have to figure out how to get it in there another way. I don't understand why it's not posting, because it should be. Let me try it one more time. Well, if that doesn't work, I don't know why. If not, what I'll do is tomorrow on the commodity show, I will certainly repost it tomorrow. I'll be home tomorrow, and I will be able to post it tomorrow. Yeah, good. It's up and running. Yay! There, it's good. But it's okay as long as the chart posts. But I'm going to cover it tomorrow, too. As a matter of fact, until this thing stops working, I'm going to bring it up every day, because this could be, we could be at a really an important spot here because of all this stuff lining up. And the number of people that are looking at what I'm looking at and what Shane was looking at is very, very rare. I mean, it's just there's not a handful of people that look at this type of stuff. What it does is it gives you the energy that's there, plus we're looking at the patterns that are there. In other words, the market's bottoming what we think is today the the full moon and the lunar eclipse, and it should go up into the solar eclipse. Now, it might not be the exact day, and the problem is that we're coming into the 11th, which is Saturday, so that gives us Monday. So we're going to be in that zone between the 13th all the way out through the 22nd, that this thing could literally turn on any one of those days and head down. The key is that if it heads down after the rally, that will tell us, yes, there's going to be a potential for a 1987 type move to the downside. We certainly have all the things that are there. I mean, we have the record margin debt. We have the largest number of bulls that we've ever had, and we get all the other things that are there too. Plus, we have the QE stuff that's been going on. So any of those things could cause this thing to have a severe correction if that's the case. But the biggest thing of all, folks, is what we talked about several weeks ago, is that divergence that we had in the New York Stock Exchange Index on July the 3rd, when the Dow made new highs. The New York Stock Exchange Index could only make a 786 retracement. And again, when the Dow made a 1.27 expansion on September 3rd, i.e. the anniversary date of the 1929 top, and the New York Stock Exchange Index could barely make a double top by only a few pennies. So that's part of what we're looking at. So there's a strong probability that we could be bottoming in here today, and then have a pretty good rally. Okay, we're going to take a little break here. We've got the Dow and the S&P up a little bit, and we got gold down. We'll discuss gold after the break.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Larry takes your phone calls now, toll free at 1-877-927-6648. Internationally at
727-445-1044. Okay, folks, I've posted the chart of the Dow Jones Industrial Average with the Bradley model overlaid on top of it. This is a visual way of describing what we talked about. This is very similar to the type of thing that happened in 1987. 1987 also was suggesting there was going to be a very big move down in the market, and it in fact did that. We're looking at the same thing potentially this year, but remember, it's nothing more than probabilities. One of the questions that we've had is about the particular lunar eclipse and full moon that we have now. This is known as a blood moon. It happens several times a year, and it's basically due to the ions in the atmosphere that give the color texture of the moon as a blood color. You can see it, pretty easily, and that's what's interesting. I have a funny story to tell you folks about the moon, because I was thinking about this as I was getting prepared to do this. On a trip that I had back to Zurich back in 1988, the Bank Loy, which has since been taken over by one of the other banks in Switzerland, asked me to come over and talk to their traders for 4 days, and I did that. And on my way back, they were very kind, and they sent me back first class, back to the United States. And so I was on the plane, and it was a red eye, and I left around 10 o'clock at night. And it was about 1 o'clock in the morning, and the plane was almost empty. There was very few people. There were only about 12 people in first class, and most of them were young kids, and they had guitars, and you could see that they were some kind of musicians, and they took out their guitars and they started playing. And not going to believe this, folks, but the first thing that they came out of their mouth was, "I see a bad moon rising. I see trouble on the run." It was Creedence Clearwater Revival, and they actually sat there for 2 hours and entertained everybody on the plane. Back in Lodi again, Proud Mary. I mean, it was fabulous. It was the best flight I'd ever been on. It was like it didn't even exist. It went so fast. But that was the funny part of that. Well, I see the bad moon rising. Whether this all happens or not, we're going to know in a week or less. So just keep an eye on it, because all these transits are lining up. Now, there's some things that are telling us that there is a possibility of a bottom in here, and one of the things is one of Basil's favorite, and that is the VIX index. The VIX index is acting, really relatively well given the rest of the market, folks. I mean, you take a look at this. We made a higher high than yesterday by 3 cents in the VIX, and this is with the Dow down 270 points. Give me a break. That's like when it broke out above 17 the first time, and then the Dow turned around and rallied 400 points. So this is telling us that this is not necessarily, going to be a spot where we're going to collapse from. So as long as this VIX stays under 18, I think we've got a chance here to rally. I know you folks think there's somebody else talking on the show today that there's a possible rally in the stock market because I'm so long-term bearish, but short-term I'm not. I really think it has a chance to make a turn here and, have a little bit of a rally of 5 to 7 days, and then we're going to see the sparks fly if this pattern, keeps going like it is. Boy, it's setting up so nice, and I know, they say beware of some of God's greatest gifts or unanswered prayers, but I really believe that if we have a chance here to fulfill this the way we look at it, this could be one of those moves that only lasts 5 or 6 weeks, and it might be the greatest buying opportunity of this decade. I don't know. That's what it was in 1987, but whether it'll happen this time or not, I don't know, but it could be very interesting. I'm looking at potential prices of around 1750 in the S&P and around 15,000 in the Dow are the targets that I'm looking at if we do anything near what we did during that time. So keep in mind that it hasn't happened yet, but this VIX index certainly is not giving us an indication that it is going to be a big drop in the stock market anytime soon, because we should have gone higher than 1803 today in the VIX index, and the previous high that we made 4 days ago was 1798. Give me a break, folks. That's indicative of what happened between September and January. So this is not a scared market from what it looks like. It's a down market, but it's certainly not a scared market. So we'll see if we get that type of move coming. We've got to take a little break here. Stocks are trying to hold gains, but it's very difficult.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Strange. Okay, we're back, folks, and we've got a caller from Atlanta, Georgia. It must be Priceline Charlie. Are you there?
Yes, I'm here. And Larry, I want to let you know that I got up extra early this morning, 4:30 in the morning, and I watched the lunar eclipse.
Oh,
it
good.
first starts just like a little bit of black. The moon is bright white. Mm-hmm. And then it took about an hour, and it went from white to black. And then all of a sudden at about, I'm on the East Coast, so it was 4:30, about 5 to 6 in the morning. 6 in the morning started turning that orange reddish color. And the part that I noticed the most, that I had set up on a hill where there's some trees. And then all of a sudden as the moon was setting, I was going to lose it. So I moved maybe 25 feet, and the moon moved up. And it was incredible. To me, it's like Pythagoras sitting there and calculating what is the distance that I have to move to make the moon move. It was incredible. but it was a great time watching. There was only one other fruitcake beside myself sitting there watching the moon at 4:30 in the morning.
Well, there were two of us. So that's good. What can I do for you? I see that your price line is still dropping.
Yeah,
well, just be patient here. I think you get a chance to sell it a little bit higher. You got out of it around 18, didn't you? 11.18 or something like that?
I got out of it. I saw the opportunity, traded back into it, and I just got out of it again. When you just said I got out of it just a bit ago at 11:05. The part that I just want to go over one thing, just to make sure if I understand this right. The peak was at about 13.20. Mm-hmm. It dropped to about 11.40. So that's about 180 points. When it bounced back up, I thought it would bounce up to 12.30, like half the 180 would be 90, added to the 11.40, that would be 12.30. Instead, it only bounced to 12.05. Does that mean anything to you?
No, not really.
No? Okay,
no.
The next part that I was trying to project is where is it going to? 13.20, 11.40. Can I say maybe about 12.50? I'm sorry, 10.50? Is that the right number we can see?
Yeah, the D leg, the ABCD leg measures to 10.50. That's correct. That's a longer term price objective on price line, which is not very far away. That could be 1 day's trading now.
Right.
Or less.
Yeah, and that's really, we're in a zone right now where covering should be done, but it can't go down to 10.50 and then more covering. So, and then coming back for the bounce. By the way, I want to bring your attention, I only do shorting. I don't buy anything, never buy anything long. I don't believe in it. I only short.
You must not done well the last 5 years, Charlie.
Oh, I've done terrible because I keep coming back into it. But I want to let you know that I've learned from my last time that you take little hits, little hits, little hits. Eventually you get it. When it starts to go, it goes very fast. I want to add another short. I started shorting Google. And I figure that's where the big bucks are. And one is an advertising company, which is Google, and the other one is kind of advertising, Priceline, travel. But I think both of them are in prices that are incredibly high that have potentials to go down incredibly low like we did in the 2000s. So,
well, that certainly could. So, you're doing the right thing. As long as it's going down, you're okay. It's your day to dance in the sun for sure, Charlie, if you've been bearish for the last 5 years.
No, I don't believe in going long. I don't believe in going long with anything. I believe only waiting for the right time to go short. And then the short is very fast. It doesn't take long. It happens quick. You get your money. And then you can go on with your life and do other things. But I think this is a great opportunity, and you've been pointing to it, and I intend on taking advantage of this opportunity. But
well, let's see what happens. Each day we'll check on it when I'm on the air, that's for sure.
Okay. So thanks for the information. So 10.50 is the number that I thought it would be. Very
yes,
good.
That's the number I'd be looking at.
Okay, thanks.
Okay, thanks for calling in, Charlie.
You're welcome. Bye.
You bet. Okay, the next chart, folks, is we just had something very important happen today in the precious metals market. I posted into Tiger TV the price of silver, and overlaid on top of it is the price of gold. And as you can see, silver had a large divergence. In other words, it could only make a 786 retracement of the previous day's high, whereas gold went all the way up and made a 786 retracement of the high from October the 25th. So this was a sign of divergence, and now what we're doing is we're having the first test to see if the market is going to hold these levels. Now, the key level I think to look at in gold is between 1,200 and 1,195. That'll be right in the zone of a 61% retracement. The price in silver will be around $16.95, $17 per ounce, and as long as it can do that, then it's got a chance, to turn and have a Okay, sorry, folks. You have to love the technical capabilities of the internet, but when you're trying to do a show on horseback in Arizona, it's a little difficult. What we're talking about was the gold and silver making a potential retest of the 61% retracement here in the market. We will know more tomorrow on the commodity market, and we'll have a better idea if this is going to be the case. So, looks like I've lost a connection again, I think. Yeah, it doesn't think I don't think so. I can't tell. Does anybody hear me? 10-4. Ah, good. I'm back. All right, great. I can't really tell sometimes, but good. I'm glad it's off. The problem is with Skype, folks. I'm on my laptop, and there's nothing else I can do about it. So, to keep in mind that that's what's happening. The key thing, I believe, because we're over this solar eclipse, lunar eclipse, and full moon, that this is very similar to what happened in 1987, as I remember it. I see that someone's posted some things in there that shows that the solar eclipse was different than what I expected, but I'll have to go back and look at it. I'm not home, but when I do, I'll look at it. I was doing it from memory from a very old chart, but I do remember the market rallying into October 2nd of 1987. That was a Venus-Uranus, because I was on the show with Bill Griffith at it was old FNN Financial News Network in Los Angeles. It's now CNBC, and I was on the show with Bill, and I told him sometime in October I thought the Dow would be down, more than 300 points in one day. The previous previous biggest day the Dow had ever had down was 198 points, and all I did was multiply 198 by 1.618 to come up with the 300, and that was the that was the main thing of looking at that. So we'll see if that's going to be the case or not. That's we won't know that until we get out here. Until the 11th is this Venus-Uranus aspect that I think is very important. Unfortunately, it's a Saturday, so Monday could be the day when you come in and things are really really hectic. So we'll wait and see. If the market closes really badly on Friday, and I mean much worse than it is right now, you'd have to be below 1900 in the S&P and below 16,400 in the Dow. That's about 300 points from where it is right now. We could be looking at something similar to what happened in 1987. Frankly, I don't really hope that we have anything like that, because that really hurts a lot of people other than the few people that are short. But it hurts confidence and volatility. Well, it doesn't hurt volatility, but it hurts people, wanting to come back into the market or not, because the public is, they're never short. Or with the exception of Priceline Charlie, there are very few people that even know how to short the be that. No, no, it's I asked him to say a few words, and his answer was a few words. No, I'm by myself right now, so I'm okay. We'll try to get Mark Douglas on the show here real soon. He's finishing up his book, and it's really going to be a really blockbuster book on psychology and stuff, so it'll be very interesting to see when that comes out. It'll probably be out right after the first of the year, would be my guess. So I noticed that today they are really hammering Sears, and that company's gone through so many transitions through the years. It's really amazing that they've held up against all the competition that they've had, thus far. In the stock market, what we'd really like to see today is we did make a lower low than yesterday, our previous low at 1918.75. We went down to 1918 in the S&P. We did the same thing in the Dow, and we've had a little bit of a rally, not much, but we'd like to see, and I'm saying from a technical perspective here, and the market it is grossly oversold right now, is to start a nice little rally here that could last anywhere from 3 to 10 days. In 1987, it lasted I think it was eight trading days or 9 trading days, and then we'll see what happens. Because if it works out that way, given the fact that all these things are lined up with even Mercury retrograde was going on in 1987, just like it is now. That started on October the 3rd. So it's going to be a very, very interesting October, to say the least, and we'll have some wild volatility. The only reason I'm bringing this up, folks, I know a lot of you guys have 401ks and stuff, and believe me, you don't want to get hit with a 25% hit in the market if you can get away from it. So if it lines up that way, protect yourself by buying some puts, buy way out of the money puts, and if it's right, you'll get back even to what you've lost, and if it's wrong, you lose a few dollars of insurance. That's probably the best way, the best way to play it. But overall, long term, this market has made the mother of all tops, in my opinion. And if we look at the German stock market, you talk about a market that's getting hammered. The German stock market is not only making new lows for the year, I mean, it's really getting hit. It's down well over 11% in just a matter of a few months. And this just looks very, very bad. So if you look at the emerging markets, that also has gotten hit very badly. The Chinese stock market, the FXI, looks absolutely horrible, and that's what it's doing now. It's making bonds, have this tremendous rally. We've got a chance to bonds to get up to 144. That would get rates probably around 2.5%. Would be somewhere in that ballpark, I would think. So that's what one of the things that we're watching very, very closely, of course. But we'll have to wait and see. I do want to bring up the junk bond market because I've had several requests to talk about that. We will take a look at those right now if we can get those into the room here. They've had a little bit of a rally and then more of a sell-off today, but they're still headed down, in my opinion. We've got just some more to go to get down to the 786 level. So that's that should take it down to about 39.62. That's another 5% or so down on the no, not even. That's about 3% down on the junk bonds. But if you look at the junk bonds in relation to what's happened to the treasuries now, treasuries have gone basically straight up with this flight to quality. And if we take a look at let's take a look at these treasuries, because I did this last night just to see what the objective would be on these, given that the flight to quality is going to be really big. And if you give me a second here, we'll put it in here. I think I've got it done. Yes, I do. Give me 1 second and we'll get it here. Yeah, we could make 144 without any trouble at all here in the bonds if we have any type of more of a flight to quality, and that's pretty much what we're looking at. So we're looking at possibly 4 more points higher. That would get rates down to about 2.5%, and we'll see. Okay, now someone asked me to repeat what was happening in 1987 to where we are now. They're not vaguely similar. They're very similar. In 1987, the market topped on August the 25th, which was the 5-planet conjunctions. All 5 planets were at 0 degrees. And not only that, they were all in the sign of Leo. And I'll finish the rest of this analogy when we get back from our break. Got the Dow up a little bit, the S&P down just a fraction, and the NASDAQ up slightly.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Okay, we're back, folks, and someone has brought the question up about the relationship between what's happening in 1987 and what is happening right now. And I'm doing this from memory and a chart that I've had in my computer for a very long time in my laptop. And what I'd like to do in order to be fair, as I'm going to go over it now, but in tomorrow's commodity show, I'm going to go into it more in depth, because I know I remember so vividly the October high. And the reason why I remember that is because it was at a 61% retracement. I was on Bill Griffith's show at FNN in Los Angeles, and I had bought October puts, way out of the money puts. I think there were 2 strikes out of the money that looked like they had virtually no chance of working, and yet they turned out to be pretty good. However, if I'd have bought November puts, I probably could have bought half of the exchange because you just had to add 2 zeros onto whatever the profit was. It was very good, and I was very happy because on October the 16th, which was a Friday, we had the Dow was down 106 points, which at that time was a lot because the Dow was only trading around 2,600. And then on that next Saturday, I drove to Los Angeles because there was one of the market wizards was getting married at the Beverly Hills Country Club on Sunday, and I went to this wedding, had a wonderful time, and then coming home Sunday night, for some reason, I had called New York to talk to a friend who worked on the trading decks at Goldberg Brothers, and he told me that the world was coming unglued, and we didn't have overnight markets and stuff, but I found out that gold was up about $35 an ounce, and the Swiss franc was up 120. We didn't have a euro or anything like that, but that told us that there was going to be, something really bad happening in the markets on the Monday the 19th, and that's in fact what it did. But what I will do is I will go in and double check all of this tomorrow on the Tomorrow Show for the commodities, and we'll take a look at that. I'll also try to have, I'm pretty sure I can get Arch Crawford on tomorrow, and we'll see if there is in fact some other things that might be here that I've missed, because I've looked at the things that I've tested, and they look pretty good as far as these transits, but the transits say we're getting ready to rally, and we made a lower low than yesterday by that previous low by one or two ticks. That's usually not how that happens. So we'll have to wait and see whether this is going to be it or not. Longer term, it looks really nasty, folks. That's all I can say. But if this Bradley model comes up and fulfills like it is and starts to work, you don't want to fade it, because when it does work, it works very, very well. That's the whole key. It's all probability based. That's the bottom line of what you're looking at here when you're watching these different patterns and stuff. Also on the commodity show tomorrow, we've had a pretty good rally, about 20 cents in corn, which is for that a huge bull market, and we've had a little bit of a rally in wheat and beans. We'll cover that tomorrow on the show, but we've got a possibility here that these metals could be changing trend today with this test that we're having in the 61% retracement in the gold and silver. But if they fail, you're looking at a lot more on the downside to both of these. That's the primary thing. But the best thing to do is just wait to see this. If this pattern unfolds, that we get a little bit of a rally here over the next 3 to 5 days. And if that happens, we'll take a look at it. The euro has had a major bottom in here. We've had 190 pip rally in just a couple of days. We bottomed on Sunday night, and we've rallied 190 pips, so the dollar might be turning. Live every day in an attitude of gratitude, and may God bless.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.